Hey folks, just going to take a look at AT&T shooter here, February 1st. Let's take a look at our disclosures. Of course, prior success does not guarantee future performance. Jump right into the charts. I'm just going to start off on the daily here. I have an alt count down here that, could manifest, may not. So we're at this 2554 range, and we've come off quite a little bit here, so we're looking for this 2 at 24.12 to hold. So now, as long as that does not close below this 23.56, I think we're going to get this minute or minute wave to the upside. Let me just throw a channel up there so you can see about what it would look like. So it's looking for a little bit of a wedge, but that could measure all the way up to 29. So my concern is this breakdown. Now, I also have a primary wave down here at 2055. So that was just my caution I wanted to express on selling the short side here. I think there's quite a little bit risk just to a little more downside. Now, if I jump out to the weekly and take a little different look, I have this speed line down here that, even though I believe it's in a good spot and I don't believe that we're going to come off, I just have to exercise caution when I start seeing, these channels sort of line up a little bit, or these support zones, where our wick shows on our close here, so we should hold, but there's nothing that would prohibit us to put one more tag down here, maybe on this speed line, and then go. Just looking at that, from the level. So, and I'm just going to run a count again while I'm here to make sure I'm not seeing something different. I would just exercise caution here, right? Just for short period. I have a lot of upside here. My counts are way up here at 60. Realize we're below those counts. So the cycle wave is really distorted, just giving you a view of where that count should have been. And this is what I mean when I talk about distortions when we look at a chart that we see. And I'm just flipping around to try and get you a better picture of it. But that is our cycle channel, and we're way below that. So this is beyond an overshoot right here. This breakdown here, I think we get back up and above this. I would even come over and say, well, where was my important line here? And I'm just going back in time. We've got this channel support, just walking it back. So, this has been right where we're at, that base. And I'm just going to put another speed line there. That channel, has been a choppy zone for us, since going back to the Great Recession. So, that's important. And, on top of that, we broke, I had this trend support, with this channel support, we need to stay above. We get below this channel line down here, it's, then we potentially could break down. So let me come out a little bit further. I'm just going on a larger picture here, working through the chart. So this channel support, we have some confluence from here. Notice how it came off of our 1989 high, and we're continuing here. And I'm just following this trend channel out. Now I've looked at this. So we have our first tag, our back test, second tag. So equality to me would be about 25, but that's way out in time, when I'm looking at that, but from a larger perspective, when you're looking out in time on a chart, always step out to your larger time frames to get your clarity, because we have a super cycle channel that's way the heck up here, with a whole nother channel that's up there, and we're well below that. Anytime we are that distorted from the trend channel that we're in, it's concerned, because this could continue for quite a little while. I'm not saying it's not going to get out, but, my opinion is that we want to be cautious here taking the short side, because this is where you might see a breakdown and be caught on the wrong side. And that's just my take. Now, I have no problem going out to the 90-minute and looking at this chart and saying, hey, this is my stop. If you want to earn some income, we got this gap down. I think the gap definitely gets filled. So a short-term low-risk trade would be for, 25 up here, go out, 4 to 6 weeks beyond the time zone. So February 4th, so go out to March, and, you could do the first week of March even, do a 25.50 if it's there, or a 25. I haven't looked to see if it's there. And, I would just throw in a stop right here down at this 2. If it breaks below that 2, I would be out of that short-term trade, because then we could continue to break down. I just don't like that little look there. I think it's pretty solid. So that way you can still play a little bit, make a little money on it, but you're heading to the upside. And ultimately, I would start trimming my longs, off of a 90-minute chart if we broke below this trend support right now. So let me just throw that line up there so you can see it. Come out to the daily. There's a lot of mess right there. So now let me go back and make sure I measured it correctly. Yes, it measures on the 90-minute. So it's a little distorted on the daily, but it's there. And so a close below right now, based on the tape, 23.59. So draw that same speed line on your chart and set an alert. Closes below that, I'd be trimming to the downside, because then we're looking at this next support line right here, around 22.70. So that's my take. Until next time, folks, great trading.